You actually think people aren't going to be as impressed with U.S. production next year?
No, I always say the cure for low prices in the U.S. is low prices, and that is you're already starting to see a number of U.S. producers starting to back off. We've heard about 3 or 4 of the mid-cap companies decide that. And so as a result, I think it's going to take a while, but overall, we do think that you could see a little pressure in the first half, but the results start to see, more demand in the second half.
So how much damage do you think is being done to U.S. oil production right now? I mean, are there layoffs? Have tons of rigs been coming offline? Are we talking about damage to those parts of the economy?
Yes, I mean, the last 6 weeks, we've seen the rig count down each of the last 6 weeks, which, I mean, we're still up more than a couple hundred on the year over year. But that's a great point. We've seen that now hit from a lot of areas, even the Permian, which has obviously been the hottest area this year. There's even talk here around Texas, in Midland, about some of those places starting to at least soften a little bit.
But their break-even prices have come down. It's interesting to look back at when things collapsed to 30 or 40, and everyone thought this would be the end for U.S. production, and it was painful, of course. But then people got more efficient. Is it possible that happens this time around? It takes us to yet another new high.
Definitely people have become more efficient, but what's going to happen is the pressure on some of the smaller companies becomes more and more, where, again, you might have some of the larger companies with perhaps a $30 or $35 break even, but I can tell you the all-in break even for some of these smaller ones is still closer to $50, or if not $55.
Neal, it's Joe. So in a 30-day period earlier in October, you had the price of oil go from 76 down to 52. We haven't seen a 52-week high to a 52-week low since 1984. The culmination of the events in Saudi Arabia, the Iranian sanctions, the Chinese trade war, is oil basically become a political a football or a proxy that really the price has been somewhat manipulated, and investors thinking for 2019 have to keep that in mind?
The political football is a great comment. You never would think, but behind each one of those things, you've had the Trump administration in one way or another, and obviously with the volatility behind that, the U.S. can do a lot of things on the demand side, or even perhaps even more so on the supply side. But again, when you have the political environment coming in, as you stated, a lot of that is out of the hands of the simple supply-demand.
People also said that, looking at the demand picture, sure, we sold off in tandem with the equity markets, Neal, but if demand's okay next year, and to your point, if there's going to be less U.S. production, all of a sudden, are we going to be the opposite of what Joe was just describing? We go from a 52-week high to a low. Could we snap back just as violently if it turns out, demand's okay and the supply can't meet it?
I think that's the case. That's what I'm a little bit worried about. And when I talk to my investors in oil, the thing they don't like and what they sort of have been staying away from the energy market is this volatility, this sharp volatility, as you pointed out. And so the things you have is that OPEC and Russia have already stated they combined will cut about 1.2 million barrels, and even more recently if needed. And then the U.S. just is sort of a market forces, as we know. So it doesn't basically cut as quickly, but we do think by end of first quarter, early second quarter, you will see that supply cuts in the U.S. started to flow through. So it'll be, again, a combination, I think, of both OPEC, Russia, around, as well as the U.S.
Is, Neal, 2019 going to be an RIP year for OPEC as a cartel? I mean, Qatar's already leaving. People in the markets are already talking about how the big three has supplanted OPEC now, meaning the U.S., China, or U.S., Saudi, and Russia. Wither OPEC?
I still think it's, again, very, very important, but you have to lump Russia in with it because, as you pointed out, of the, let's call it 99 million barrels a day, you have now the U.S., Russia, China, obviously responsible for more than a third. But again, OPEC being itself a third of that is still very, very important.
You think that? So how much influence, if they right now really wanted to, turn the screws, Neal, they could still do that? U.S. couldn't offset that?
No. Right now, if they want to really turn the screws, specifically Saudi, they could come in tomorrow. The hard part is, based on that prior question you said with the political football, a lot of the things going on now geopolitically between Saudi and the U.S., I think, is preventing Saudi from doing that immediately.
Yeah, and they want a higher price for their budget.